Hey, good morning, everybody. Guten Morgen. It is Tuesday, December 4th, 2018. This is your daily Forex trading strategy session here at Forex.Today's YouTube channel. Let's go. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma, Jumbo, Ohio. Hey, good morning. My name is Wayne. I'm a currency trader. Been doing this a long time. I'm here to share. I'd like to make you a better trader because you make me want to be a better trader. I do these sessions Monday through Friday here at the Forex.Today YouTube channel. You're welcome to come on by. Just subscribe. So today I was a little bit late. I was about to start the webinar and then my PC said, hey, you haven't restarted me in a long time. So I had to reboot. And I had to get everything back up and running. So I was a little bit tardy because of that process. You know, if you subscribe, when I actually start the stream, that's when you're alerted and say, hey, why don't you come on in? We're ready for you. So that just makes it easier for you if you subscribe. So please subscribe. I appreciate the likes or thumbs ups or whatever you call those things. And I sure appreciate your comments, and I do read them. So if you'd like me to address a particular topic or a particular currency pair, leave it in the comments below after this webinar. And if you're watching a video of this instead of a live stream, leave a comment, right? Just leave a comment, say, hey, awesome, thanks, or here's what I learned, something, okay? So without further ado, I'd like to invite you to visit tradersway.com. I am the Chief FX Market Strategist for Traders Way. So if you are benefiting from these webinars, you should pay it back by opening up a trading account at tradersway.com. Kick down, come clean, don't be a holdout machine. That's what your mama would want. Let's go to, I guess we got to go here. Ni hao, Daniel. Ni hao, Henley. My daughter, I said, Ohio, win. And she said, Jumbo, Daddy. So anyways. Cool. So let's just go like a boss. Let me get my little drawing tool. La 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 la. My phone is freaking out. My phone is freaking out. Okay. Let's see. Recover. Hang on. All right. Cancel. Ignore. All right. Maybe that'll work. Yeah, yen crazy today. Well, yeah, you got to be careful though. All right, Mr. Highbolt. You know I always do this when people say similar comments. It's not freaking out. So just be careful. Make sure you're talking about specific time frames. You know, this is simply Kiwi yen coming down at the London Open. I wouldn't say crazy. Someone said crazy. And oh, I'm sorry, Mr. Highbolt. You said streaming quality. Okay. No. Azabu says crazy yen today. Well, let's say okay, it's down. I wouldn't say it's crazy. The volatility looks straightforward, or at least the Okay, and you got to remember the trade plan is this, right? So I wouldn't say it's crazy when we discussed 24 hours ago the need for a retracement, right? So I wouldn't call it too crazy. Yeah. I wouldn't call it crazy. In fact, if I were your coach, which I am, I would encourage you not even to say or think such things. So what you've done is you said, I don't know what's going on, so therefore it must be crazy. Then you thought about it, you think about it, you're emotionally responding to it, and then you decided to type it into a room. So now you had to like use the part of your brain that knows language and typing, and you put it in a room, which means you're sharing it with other people, which gives you vulnerability. So you're so willing to call it crazy in a sense to almost protect your psyche, that if it's crazy, then it's not your fault. In particular, if you've lost money. Well, I wouldn't go that far. I wouldn't call it crazy. Okay, so just be careful. Don't even use that kind of language. The market's not crazy. It's logical. People are buying and selling based on supply and demand and risk and reward. It's very logical. So, right? So, anyways, a general plan for longer term bulls is this. No. I'm not saying I'm not beating them down or her down. I'm saying that it's not helpful to think that way. Okay, because you're detracting yourself from your reality and you're giving yourself an out. So if you lost a bunch of money today, but the markets were crazy, then it couldn't possibly be your fault. And I would say, no, actually the markets were ruthlessly logical and intelligent. Okay, so like on this 30-minute chart, you can see right at the London Open, there was a drop, pull back into the roll reversal on a pivot point, and then somebody sold it. I mean, that is straightforward. I mean, that's just that. Yeah. Now you might say, well, why is the yen strong today when we want it to be weak today? Weak. Well, that goes to the next thing. What time frame are you talking about? Bulls actually needed it to come down. Then there was this idea overnight that Trump may not have been entirely clear in his tweet the other day about the deal he has with China, which to me shouldn't be that shocking. But now the market's freaking out like, hey, what is going to happen and what's going to happen to the car companies and all this. It's just more uncertainty. I think one interesting thing is the 2-year yield is now today higher than the 5-year yield. Isn't that interesting? And the 10-year dropped below 3%. So these are interesting things. And the dollar is weak. So it seems to me American investors are unsure about what's going on more than foreign investors. But anyways. But would I call that freaking out? Now, all these things are pretty logical. So uncertainty in the future is not good global macroeconomics, but bear in mind, macroeconomics takes in weeks, months, quarters, and years worth of data. So if the London session was down today, that's not necessarily macroeconomics either, right? All right, cool. So let's just go back and just be ruthless and intelligent about our analysis. If we were bulls, this is a buy zone. We preferred this one, obviously, based on the roll reversal, which I identified yesterday. So when we were up here yesterday, I said, hey, it should come down to here, in which it could produce a buying opportunity. Well, maybe it did for you, maybe it didn't, depending on the time frame you're looking at. Okay. did this get you to buy? Probably not. Okay, but can you still be a buyer? Oh yeah. So you could use things like Fibonacci, but I prefer pivot points. So if I was still a bull, I mean, I would have been a bull here because of the higher high. This high is higher than that high, all right, off of a bottom here and here. That gives me a lot of permission to be a bull. And what does it set me up to do? Well, buy a retracement. So I could look at this and say, oh, it's a 382. Not double top, roll reversal. That didn't work out. So what's my plan B for the week? For the week! And that puts me long about here. I think I got that right. We've got so many lines now I've overlapped. Wait, maybe I don't have that right. Let's get rid of the fib because I don't use the fib. Oh no, so it's down there. Oh yeah, it could fall actually a little bit further. So anyways, you can still look to buy, is all I'm saying. It's not over, it's not done. Okay. So plan A failed, so plan B would be closer to this. Let's update this because maybe I drew this before it actually happened. I don't remember. Okay. So anyways, that's it. Yeah, absolutely, a USD CAD for sure. Mr. Highvolt says, I have a hard time reading the prices on the charts. Well, you should have the same templates, right, Mr. Highvolt? I want to remind everybody that the templates are available for download in the description under the YouTube video so that you could have the exact same chart. So all you'd have to do is go to your CAD Yen and you would see the exact same thing. Okay. Plus, I'm not looking at prices either. All right, looking at Euro Yen, this one was less believable if you remember. So what do we want to do? Well, there's a buy zone right where we are now. So if this is going to go up this week, it needs to stay above that gray area. So it's just fine. Okay. So this plan that I have, it's basically the same. Let me just move this over. Oops, no, move that over there. Move this over here. No, no, come on, you're on Yen. Okay. That works. Yeah, well, the big question, so Chuck says gold going up, no surprise since dollar's weak, but why is dollar weak? That's the bigger question. Decent global macroeconomics, yeah, but what the reason I said I was talking about the 10-year. Okay, what happens? So now that the 10-year has dropped below 3%, so it's now like what, 2.97. What does that mean is happening? If the yield has dropped, then that means the price has risen. And if the price has risen, it's because people are buying. Now, typically, when prices are rising, so we'll put this price, when prices of treasuries in the United States are rising and yields are falling, typically it's foreigners like China buying those treasuries, which drives prices up, which drives yields down. Okay, now why does China do it? Well, because Chinese money, right, leaves China, goes to the United States. So Chinese money weakens, the value weakens because the global supply increases. And then they buy American dollars, to buy treasuries. So treasury prices go up, the value of the dollar goes up, which then makes Chinese products cheap because the dollar now can buy more Chinese products because the dollar is stronger and the Chinese currency, the yuan, is weaker and all that kind of stuff. But the dollar's weak, not strong. So what's going on? That's a much more interesting question. How could yields be falling and the dollar weakening at the same time? Ha ha ha! Well, if you don't know, think about it. Do some research. What does it all mean, Basil? Okay. Yeah, figure it out. So anyways, just the general plan is this was support, right? This was support, this was support, and this was support, this was support, this was support, this was support. So now are we in a situation like this? Oops. Yeah, maybe, right? So don't freak out about what's happening now. There's no way you could be a professional investor and you're freaking out on a daily basis about things, right? You have to just simply ask yourself, are we doing this or not? So if that's the case, then these are pullbacks. And if they're not pullbacks, it'll go lower, but then you just have plan C. That's why, I never encourage you guys to say, oh, the markets are freaking out, the markets are crazy, No. That can only be true if you don't know what's going on. So right now, that's a plan. Buying down here is a plan. And then, of course, there might even be a plan here. Okay? So that's all there is. It's not crazy. There's no craziness. There's no crazy. Don't be crazy. Yeah, well, John, so what Chuck is now commenting back on John. Well, what John is saying is macroeconomics. When macroeconomics are good, so the two largest economies in the world decide to do a trade deal together. That's good, right? Yeah, of course it's good. So the dollar should weaken. I told you the guys that last week before the G20 even happened. If they put a deal together, the dollar would weaken, the yen would weaken, the Swissy would weaken. If they didn't work together, then the dollar would strengthen, the yen would strengthen, the Swissy would strengthen. Done. Enough said. Check, please. Right? So it's just matter of fact. Okay? And then what we talked about yesterday is that from yesterday and towards today, there could be sort of this figuring it out period. I don't know how I referenced it yesterday, but I did say don't be shocked. No, I didn't say that. I think I just said expect a pullback. I don't know if it was going to happen then but there's this big relief rally. Oh my God, China and the United States and everyone, does their thing. And then we find out, wait, there was nothing signed. There's no written signed contract. It's just talk, right? So then people are like, wait. And now, so it comes down a little bit. But then there should be this idea, well, at least it wasn't bad. At least they're talking and all that kind of stuff. But this 90-day limit that Trump put on the discussion, that's not a red line in the sand, as Obama would call it. It's just in 90 days, they're going to still not have a deal. But at least they're not raising tariffs more. Now he's going to threaten more tariffs and doing all this, but that's just negotiation. And so in 90 days or less, they're going to defer even further. And this is going to go probably through all of 2019. They're probably not going to sign a deal. They're going to talk about it. They're going to have lots of meetings about it. But just Don't worry about it. Just make money. Yeah, Obama who? Chuck says, I did say to expect a pullback, but it's not like I'm predicting anything. People that do say the markets are crazy. Now I got to go back and pick on Azabu. They're freaking out like, oh my God, there was a Trump and Xi, right? Well, we talked about it very casually last week. I'm like, yeah, okay, and this is what's going to happen. Great. And they're like, oh my God, so now it's a rally. And then it comes back down. Oh my God, it's coming down. Like, we got to move all that away. What I talked about yesterday is you concentrating on cause and effect. Okay? And in this case, right, we've had the effect of this G20 discussion between two major economies. That's good for global macroeconomics. So things change. See, if we started a true trade war where they hated each other and they're not even going to talk about it and they're just going to retaliate, then that could be really, really bad and things would be bad. But things are not that bad. They are talking there. They do want to do deals, but these deals take a long time. Maybe it takes 10 years. Like, think about it that way. Great. So you're going to have like responses, right? Overshoot, and then recalibration towards equilibrium. And then, right, but what you're trying to figure out as an economist and then later as an investor and trader is the equilibrium point rising? Is it shifting up? In this case, like on euro yen, maybe euro yen is not the best currency pair, but we'll use it anyways. If the equilibrium is shifting up, that means macroeconomic conditions are improving. As Jimbo says, it's not a war, it's just restructuring. And yeah, great. So in that case, right, because isn't the ultimate question like, are we going all the way back to 2008 lows? Is the end of the world near? Is capitalism returning to the abyss? It might be your point of view. You might have the point of view the markets are going to crash, the U.S. market is way overpriced because of the manipulation of their central bank, and that we're all being controlled by a mothership sending signals from deep space and blah, 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 and you're going to lock yourself up in a cabin with a bunch of guns and 5 years worth of firewood and live in the forest. And I mean, this might be you. Look, I live in Georgia. That's half the population. Right? Great. If that's you, put a plan together and make money, bro. Because when the end of the world comes, you might as well be filthy, stinking rich and die in a Tempur-Pedic bed. Okay? But if it's not going that way, then what is it going to do? Are we moving sideways for the next 5 years? Or are things going to slowly improve for the next 5 years? And think about it that way. Okay? So, let's be calm and about these things. So if things are generally improving, that's my bias, by the way. I just set my bias. Now, with my bias set, and by the way, the bias is what you talk to clients. You talk to clients about. Bias is what you talk to clients about. Talk to clients about your bias. You talk to clients about your bias. Sorry, I've been writing lots and lots and lots of papers lately, so I get precise with my language. So anyways, I don't speak good no more. Anyways, these are the things that matter. So when you sit down with somebody, especially someone that's given you millions of dollars or many millions, these are the conversations you have. Like, what's happening this year? How did the election affect things? What about this other thing? And what about China? And what about the euro? And what was that whole Turkish thing about? And so on and so forth. And you can talk not about what happened today. Oh, the markets are crazy. But like, you know what? Europe is lagging, probably because of their socialist twist on capitalism. But that's just the consequence of choosing that economic system. It's not here nor there, good or bad. It's just the consequence. So they're going to have high unemployment, slow growth rates. But you know, but you don't have to work 40 hours a week. Great. But the United States is way ahead. But because of the China lag, because of the European lag, it's affecting China, and that's slowing the pace of growth globally. However, compared to 10 years ago, right? And then you go all the way back. We are in much better place and things are improving. Therefore, the way that you should position your money, your investments, would be this way, this way, this way, and this way. Okay? Then your job as a manager now is to simply carry out the strategy you explained to your client. Because they don't want to hear about it today and what you did today and what you did in the London session, and like none of that matters. That's why I'm trying to coach you to not freak out about what happened today. What happened to today? You have a long-term strategy, right? If you have a long-term strategy, then what happens today is irrelevant. If you took the day off, at the end of the year, you wouldn't see it in the statistics. Well, you weren't here on the third day. It's just, so if you're just simply carrying out your strategy, you're just buying dips to support. And you're like, well, it should go up here. If not, I'll catch it down here. Done. Enough said. There is no freaking out. So now that we're playing this bottom here at this level, I wouldn't play it on a 4-hour. I'd drop into a 15-minute. Cool. Are you going to play this as a bottom? Yeah, we got our price, right? You got your 128.50. So are you getting in this, son? What's going on, brother? Pump up the volume. Dance, right? You got some action here, right? Are you getting in on this? Is this your plan? Are you fulfilling your strategy? Right? What is your tactical now plan? You got your price. Are you getting in? That's all it is. So you might say, well, right now I'm analyzing it. We got the right price. I'm super salivating on this. However, the way I have it broken down on a 15-minute chart, of course I can't draw sideways with a wireless mouse, so let's get back to this. The way that you might have it set up is this way. You know what? Let's get rid of this. Let's do the time up again. Okay, let's do this, right? Oh, here it is. Okay, you'll say, you know what? I got this marked up like this. So, therefore, your trade plan is you got to get the break, and then you're looking for the pullback, and then you're long and strong down to get the pippin on. Because I'm long, and I'm strong, and I'm down to get the pippin on, right? Scottie Pippen. I got to get, that just occurred to me. I got to get the Scottie Pippen Bulls jersey, right? And just Pippen. Right? It should be PIP''N. Okay? RC's already on it, playing the bottom. Okay? You see what I mean? Does this seem like an easier way to trade, guys? Versus just day trading, what you're like, whatever happens in the London Open, I will just, if it breaks out of here, I guess that means I need to short. Your London breakout strategy. Well, I guess it moved this way, so I guess today I'm going to be long. I guess that, who does that? And what a distraction. What a distraction. I hope that you see, I honestly am trying to make you a better trader, and that you will become an independently thinking, independently planning, independently successful trader. And these other things that you see sold out there are simply tactics to sell you something. And maybe they work now and again, and maybe even often, but it's not independence. And it's not something that I don't think you're going to want to do every day for the next 25 years. You see what I mean? Versus, you know, when you see the way that we plan things macroeconomically and long-term technically, and then we drive it down to smaller time frames, and this technical setup just happens to be fulfilling your macro point of view, and your analysis that technical analysis provides gives you a particular price. Like, if you get something here, then you're going to make a trade. But it's not that you're sitting here saying, well, if this goes higher, then, you know, I'm trading. I guess it sounds the same, doesn't it? But it's not the same. You're not looking for a smoke and mirrors trick. Because if this setup fails, I already have the next trade plan set on this. If I wanted to be a bull in this, I already have it set. Now we're just waiting. Okay? I think you'll become a master trader. Okay? So, let me refresh this and make sure this is correct. Yeah. All right. So here's Aussie. Aussie opened out of position, right? Right. You can see this. Hit the weekly target on Monday. This is one of only 2 counter trend trade setups that I teach. And again, this would be in the swing trading course. And that says if you're here, it can drop all the way down to here by the end of the week, or in this case, the end of the period. I would still not try for that. Okay, I still would not try for that. If I were me and I saw a move like this, and by the way, we did talk about this yesterday, where I do expect if this is going to continue to go up, we're going to blow through these the pivot target, which is not a usual thing for me to say. But anyways, that means I've set my bias and my aggression level to high, up and aggressive. Therefore, this drop here is actually 100% to be expected, 100%. And the fact that it happened exactly at the pivot means a lot of people agree with me. A lot of big traders agree with me. And now that we're here, I am very open-minded to consider buying it again. Okay? That's my first plan. My second plan would be plan B. It would be more like down here. Okay? And that's, you got to be careful there on that move. But anyways, does that make sense? So Chuck says that the daily setup, the daily day trade setup is working too. Yeah, and you'll see how important it is to know these high time frames. Like, if you knew this meant retracement, then in here you would have your daily day trade plan to be short, even though the trend is long. Okay? which takes your day trading to a whole nother level, doesn't it? Where you're like, okay, yes, this is an upward move, but today it's going to be down, and then tomorrow it's going to be back up. Oh, you want to know like a gap? Where's the gap? So I guess that would be technically here to here, which means if you get this, that's basically a fill. Okay. Yeah, so your daily move, yeah, it's okay. So we know this is the sell zone, and we know this is the target, right? So anyone day trading this to the downside should be done and taking profit, which then sets the upward move, because whoever shorted it is supposed to be getting out of the short, and that's right on our role reversal. So therefore, any bulls that want to play the bullish game is looking up, right? Right? Does that make sense? Nice, right? Did everyone leave a like? Has everyone left a like? You should leave a like. It takes less than 1 second to leave a like. Leave a like. Click the little thumbs up button. If that's not a like, then leave a thumbs up. Go ahead. I'll wait. Do a thumbs up. Come on. Kick down, come clean. Don't be a holdout machine. Come on. Give it a like. Everybody's looking at you. They know you're all right, thank you. Look at gold. Okay. Thanks, Peter. So, what about that idea I had several months ago? Should we start a cigar smoking group where we all meet online, smoke cigars together as a group online, and discuss, like, I could read like the Barron's magazine. We can read Barron's magazine together. You smoke a cigar and talk macro. What do you think? Good idea? We'll be the first online cigar group where we smoke cigars together online. Yeah, and right? Yeah, wine's welcome, tea and coffee. Right? I mean, the other thing would be to like go to a little cafe in Cairo in Egypt, right? And we'd sit in a little cafe, all men. I don't think women are allowed in these cafes. And you sit there and we play some backgammon and drink some tea and we'll talk business. Drink some tea, play some backgammon. That's how you roll in Cairo. I think that'd be a fun thing to do. Once, anyways. I'd love to visit Cairo, the real Cairo, though. And then there's a lot of places I wish I could go. Syria. No joke, right before the Syrian war, I told my wife, I'm like, you know what? I really want to go to Syria. I want to see Damascus. I want to, there goes that. right? I'd like to see Israel, but it's a lot of places still quite unsafe, I believe. Maybe I'm wrong there. I'd love to see, Egypt, but that's been unstable. Where else would I like to go? Pakistan would probably be very interesting too, but probably not the best place to visit. Such a beautiful yet scary world. No vaping. I don't have too many rules, but no vaping allowed. No. No. Nope. 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 All right, so let's go into here. I set you guys up on this trade Thursday, I think, of last week. You're welcome. Magic mushrooms. Nope. Mickey, that's pretty funny. Mickey, you don't seem like that kind of guy. Maybe I'm wrong. That's how we do it in Detroit. No, Felix, I don't. I'm sorry about that. It's funny, like there's so many good things out there, I'm sure. I'm old enough now, and I've been doing this for so long, and I'm completely self-taught, so like I still don't know what other people do. Yeah, you just, look like that kind of guy. maybe online. Anyways, go all the way back, guys. Go all the way back, because I don't know if this is good or bad. I know my hair is bad. That's why I'm wearing a hat today, but at least Ferrari World Abu Dhabi. Shout out to my friends in Abu Dhabi. Yeah. You got to go all the way back to the beginning, right? I'm self-taught. There was no books. There was very few books on technical analysis. There were no books on Forex. I even went to the university library at Stanford University in Palo Alto, just looking for information. YouTube hadn't been invented yet. Amazon.com was a little tiny startup that sold books online using the internet. I mean, this was the beginning of everything, right? And there just were not any books. And I learned MACD I bought somewhere a photocopied textbook from a hotel weekend workshop that Gerald Appel gave. And it was an audio CD and a photocopied workbook from like 1988. And I'm doing this in 1998 or something, right? And Gerald Appel had this weekend thing. And that's how I learned the MACD, the moving average divergence indicator, right? And I did things like, let's figure out what a moving average is. So we're going to do a 12 EMA, which is a weighted moving average. So therefore, you got to look at the current period, and you got to go 2 over the period plus 1. 2 over the period, 2 divided by the period plus 1. So if I'm going to do a 12 EMA, that's going to be 2 over 13, which gives a smoothing constant of 0.1538. Is that right? And then you apply that to the first number. And I'm calculating EMAs using math. Right? This is why I look at MACD. I can look at the chart and do MACD. Why? Because I used to do the math. Or like stochastics. Why don't I use stochastics anymore? I do use stochastics. I just look at it, I do the math in my head, and I can calculate it. Right? Hey, thanks, Felix. Welcome to the family. So it's like, this is how I learned. I mean, look that up, guys. This is the formula to calculate a 12 EMA. Am I even right on the math, guys? What's 2 over 13? Did anyone do the math? Is it 1.538? That's the smoothing constant added to the, right? Which would be different if you were doing a 13 EMA or a 5 EMA. Because a 5 EMA, you would have to do 2 over 6. And that gives you the whole different number, right? Different smoothing. So anyways, long story short, I don't know what other people do. I never did because there were no books, there were no seminars, there was no online training because there was no webinars. There just was nothing. Was the math correct? Oh, snap! Because 2 over 13 is easy to calculate, right? So, here's the thing. Because of this, I don't know what anybody else knows, nor do I really want to know, nor do I much care. Because what I've done, don't look at what I've done as, some people say, Wayne, you're a genius. And whoa. I have found, and now I'm ripping off, not Einstein, Edison. I'm going to rip off Edison here. I have simply found 10,000 ways that don't work. So I've failed enough to find out what works. And I don't need anything else. And this is why if you watch my training videos from 10 years ago, you'll say, oh, snap, this is like exactly the same thing. Yeah, I haven't changed. I don't want to change. I don't need new things. Spread analysis sounds really good. Somebody very smart's come along, much smarter than me, and has crunched out some math and has given that person some alpha. They're not smarter than me. No, 0.1. Okay. Anyways, they're not smarter and they're not better. They just found their way of doing something exactly the same. Look, we should all be able to come up with different math to buy here. All I know is every person on the planet that knows how to trade bought that. Because this move from here to here probably represents $1 trillion. Maybe my book? I don't know. No, probably not. It's probably not the best, but it is a book. Okay? So, think about it that way. Each one of us could have a different methodology, a different math, a different science, a different point of view. If you use the migration of elephants to make investing decisions, that's great as long as it says buy here. Your math, my math, your system, my system, your method, my method, your analysis, my analysis, right? It could be all gobbledygoo weirdo stuff, but it better tell you to buy this when macroeconomics are favorable. Hey, Bright Shadow, that's a cool name. You in Hong Kong? I miss Hong Kong, but I don't want to go in the winter. It's too cold. That's the most disappointing thing I've ever come across. I never knew that until recently. That Hong Kong is cold in the winter. I'm like, really? Ugh. So, right? Volume spread analysis. That sounds really smart. Cool. Hope it works for you. I'm not that smart. This is as smart as I get. Buy dips in uptrends. Okay? Buy at support if I'm a bull. That's as smart as I could possibly be. But if there is a genius to it, it probably keeps me out of 10 other bad trades. And that's probably what works best. Keeping out of 10 other bad trades. And my one stupid little thing of like buy at support in an uptrend You're like, that's all you do, Wayne? It's like childlike analysis. And I'm like, yep. But I do it really well. And there's probably way smarter ways to invest, but I'm pretty confident I can beat those guys. They may be smarter. Or like what I like to say is, not only am I good looking and smart, but the best thing about me is my modesty. That's one of my favorites. Please, sir, tell me how I can set my mind. I don't know what that means, set your mind. But the best way, if you're talking about setting your strategy, meaning your bias, I'd flip a coin. If you have no idea at all how to decide whether one currency is good and another one's bad, honestly, I'd flip a coin and you will improve. I am not joking. Flip a coin and say, I'm going to be a bull on the US dollar for the next year. And you'll say, well, Wayne, right now, the dollar's weak. Why would I want to be a bull? Consistency. And right now, you're correct. The US dollar is weak. It's not going to be weak every day for the rest of the year. And by a year, I mean 12 months, not the end of December. And you watch. The dollar's going to get strong. And then fairly soon, it's going to get strong. And people are going to complain that it's going to kill our exports and blah, blah, blah. It's just constant complaining on TV. Just constant whining and wah, 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 wah. So, look, the dollar's weak today. Good. If you're a bear, you're going to get paid. Merry Christmas. And bulls, don't worry. You're going to get paid too. When the dollar strengthens, and it's going to strengthen, you're going to get paid. It's when you're flipping around and you haven't made a decision and you don't even know what team you're on that you're going to start losing some games. If this is a game, you better know what team you're on because you need to play within the strategy of your team. If you're not on a team, you're a bull today and a bear tomorrow and a bull today, you're going to get slaughtered. You're not a bull, you're not a bear, you're a pig. All right. So gold, still going up. Ooh, shocking. We're above the weekly pivot target. That's also shocking, right? No, we talked about it yesterday. Most situations like this, I would say, get out here, right? But I said yesterday, based on how these pivots are calculated, I would not be shocked if this does go above. But we also have resistance up here, so don't get all gobbledygook excited. Okay? Cool, right? So will it break out? We don't know. Okay? But this would be significant if we broke above this, huh? Wouldn't that be crazy if suddenly we get above this? Okay. Now, what if you are a bear? A bear is going to want to take this down to here. And they are going to play it like an R1, S1 month. Okay. R1, S1. That's called an inside month because we're not going anywhere. We don't really make a high. And we don't make a low. Okay? Is that what you want? You know, Fred says something great, right? Wayne, don't you think the dollar will turn before the Fed stops raising rates? Okay, there's a lot going on in the world. The Fed raising and then changing the rate in which they raise interest rates is a big deal, right? But there are other things in the world as well, in particular for the reserve currency. So it's not as simple as they tell you in the textbooks. If they're talking about, you know, Turkey raising interest rates to 25%, okay, that reversed the drop. Remember when Russia raised interest rates? What did they raise it to during their crisis about 4 years ago? It was something crazy, similar to that, 25 or 30 or 40% or something. Okay, and it reversed the fall. That's straightforward when you're not a reserve currency. Now, the reserve currency gets treated differently, and people buy and sell it not necessarily for the interest. Now, their buying and selling affects the interest, but they're not buying and selling it for the interest, typically. And I don't think the Fed's going to get to 10% interest rates, right? So all we are is not even normalizing. We're only getting to the neutral rate, which I explained about a week ago in great detail for you guys. We're only going to the neutral rate. We're not even going to the normal rate. So there's a lot going on there, and it's going to happen over time. So the rate in which you move from extraordinarily accommodative to neutral to normal to, to tightening, the rate in which you make these decisions are also very important to how the value of the dollar gets affected, right? So in this case, we also have other things like seasonality, and we have things like what's happening in other economies and other interest rates. So for example, if interest rates went up in Europe, the euro would gain a lot of strength relative to the dollar, but you'll say, but the dollar has interest rates way higher than Europe. Yeah, well, new rate of change, right? So the Fed is going to continue raising interest rates. It will then hit neutral. Then it will slow down. I don't think it'll stop, but it'll slow down to maybe 2 a year instead of 4 a year kind of thing. And therefore, that could actually weaken the dollar, even though they're still raising and they're higher than the international rate and all that kind of stuff, because it's a reserve. So what I'm trying to say is the dollar's weak now, and then it's going to get strong, and then it'll weaken again. Is that right? I won't have time today, but then I'll take a look at the system and see what's wrong with it. Okay? I apologize if it didn't come through properly. Okay? So all I'm saying to Fred, just don't get too caught up in the textbook idea of the Fed raises interest rates, is expected to continue raising interest rates, therefore the US dollar is going to be strong. That's what's taught in your textbook. That's what I was taught in my Harvard classes in economics, and they're wrong. That's all. Yeah. That's all. They're wrong. If they're talking about Canada, they would be correct. But because it's the United States, and the United States, in particular the USD, is the reserve currency, then they have to make adjustments to their assumptions. That's all. And they don't, and therefore they're wrong. All right, so gold. So okay, so gold coming down if you're a bull. Great. Now what? Or I mean bear. If you're a bear, you've got your price, guys. Right? So if you are a bear on gold, this is your price. You're probably not going to see a better price this month. And if you are right, the US dollar is going to strengthen. For how long, we don't know. But that's what technical analysis is for. It tells you when it's changed, right? What's our time? Yeah, we're getting pretty close, right? And if that's true, then the dollar will strengthen, and whoever happens to be a dollar bull will then have their trade plans work out better. We'll end here because this is something I did yesterday based on oil. Remember? We measured this. The reason I did this chart is I wanted to animate, if you will, the fact that this may be important. Right? And that may put you into a new trend. Okay. So here we are. It did rally a bit. You know, let me give it a click in. Okay. We're respecting this pivot, right? This is the M2. If there are bulls and they want this, if the dollar is going to strengthen, or if the CAD weakens, okay, then this is going to happen all month long. If this is a change, and we don't know if it's a change yet because we don't have a lower low, then this is going to happen. And either way, bears need the bulls to rise it up, and then we slaughter the bulls. You can't, Michael. It's not my job. What's your job as a student? To prove your professor wrong or get an A? I'm not there to fix the professor. Guy's been teaching the class for 15 or 20 years. He's not gonna change. Imagine the ego involved being a Harvard professor and your student proves you wrong and you're like, oh my God, I've been teaching my class wrong for 20 years and the textbook's wrong too. And it's just not gonna happen. So I walk in, boom. I get that question wrong because he asked me a question and I answer what I believe is true. And of course I'm wrong. But I still get the A. It's not my job to fix Harvard. But the textbooks are wrong. That's all. Yeah, well, make money. If I cared, I'd write a new textbook. Right? Maybe I should teach the class. Then I could spend half of one lecture explaining the difference between the reserve currency and every other currency on the world. I could explain the difference of like what happens when Canada raises interest rates versus the United States. They can't be the same because one's a reserve currency, one is not. Well, both have democratic capitalist societies and both have very similar cultures and they're both similarly wealthy. And, you know, there's lots of similarities. We both hate Taco Bell, but eat there anyways, right? Great. So then what? Canada raises interest rates, the United States raises interest rates. There should be the same result, right? Wrong! And that's all. And so I could lecture on that. But I'm a currency trader, so I have a better insight to it than a professor that learned it through learning the math and reading textbooks and writing papers that prove the textbook and his professor was correct. And the circle goes on. But this is why, like gurus out in the Forex world, they take a bunch of lectures, read a bunch of books, and then they become a guru and sell a course. And then someone else comes along, takes that course and reads a bunch of other books, and then they come out and they do the same thing. And now they become a guru and sell you a course, and it's all the same crap. And a lot of it is inaccurate because this guy learned it from this idiot who learned it from this idiot who learned it from another idiot. I learned from staring at the market for blood, sweat, and tears for years. That's how I learned. I was the only idiot when I started. So this is what you get. This is what I do. This is how it works, and I know it works. And that's why it hasn't changed. So what do other people do? I don't know, nor do I actually care. But I'll teach you how I do it. And I think you'll find it makes a lot of sense. And that's why I've been doing webinars for 13 years? 14 years? Yeah, nobody has original thoughts. Well, I'm self-taught, so here it is. Here it is. Love it. So gotta jump bait, but it was real. Please please comment and like and subscribe. If you're new, please subscribe. I love it when that little thing goes pa-ching, so-and-so subscribed. That was really cool. Oh! What a day, huh? Well, thank you for being on my team. I really do like our time together that we spend every morning. Thank you for being a subscriber. Thanks for being a client of Traders Way. If you haven't yet joined the family at Traders Way, please visit tradersway.com. Open a demo account. I'm telling you, it'll take 30 seconds. Okay, you can download the MT4. You can, from this video, you can also download my chart templates and profiles and indicators. It's all there. We want you to succeed. That's the best business model any brokerage firm could have. A family of clients that consistently trade profitably. That's the best business model to have, and therefore they want you to succeed. And that's why I'm here. I am here to help you succeed. Webinar tomorrow. Well, the markets are closed tomorrow. So if you're a subscriber and I do one, you'll be notified, because I just might forget. And I might forget and do a webinar tomorrow. And in that case, I'll say, oh, once you remind me, I'll say, oh yeah, markets are closed today, so we should be, But if I do remember, then no. But that's the benefit of subscribing. So if I do one, you'll be notified. If I don't do one, you won't be notified. Okay. Yeah. So, yeah, we'll see if I remember. I got a lot going on. I have a project due in like 3 hours, multi-million-dollar real estate project. That's done. And then I got lots of homework. And then I have finals next week. Yeah. Did I tell you my other class I took 6 weeks ago on universal basic income? I got a solid A. My paper, I got a solid A for the final paper. She's like, I actually enjoyed reading your paper. I'm like, no shit, really? Like, solid A on the paper, solid A on the class. So that was good. So I'm very happy. Going for the PhD, I don't know. I like being in class. It's too much work though. And I try too hard. So like that class I was just talking about, I think most people submitted like 7 or 8 pages. I submitted a 15-page thing. I think I overdo it. I think a professor goes, holy crap, look at this paper, right? I think that's the response. So I think I overdo it. I think I could probably work 30% less and still get an A. So I don't know. I'm just that kind of person, I guess. Wow, that's wild. But that's how I live, I don't know. But PhD, what would I do with my PhD? I don't know. Like I said, I came across a job at, I think I told you guys about this, a job at Goldman Sachs where they need someone to manage money for endowments. And I just, I'm taking this class, and I just wrote up a new mathematical formula for managing endowments and stuff. I thought, if I retired, maybe that's another thing. Maybe I'd become a professor at Harvard or something. But what if I worked at Goldman Sachs managing money for nonprofit institutions like the symphony, the opera, or some other charity? I think that'd be actually a cool way to kind of retire. If I did get out of Forex or something. that'd be interesting because you'd have to know macroeconomics, but I'm actually educated now. I have a Harvard education in managing endowments, which most people don't have. So it'd be interesting. Do that for 20 years because that would be good, you know. I don't know. That'd be another way to give back. But right now, I'm not focusing on retirement. Focusing on helping you be a better trader and take care of your loved ones and your friends, your family. And then once you have enough money, once all those guys are taken care of, you can give back to charity and let some idiot at Goldman Sachs manage it for you. Who knows? Yeah, no, it was nice. It was too complicated though, so I killed part of it. So I know it doesn't look like much. Doesn't look like much. Okay, so I came up. The blue line is what 79% of endowments use right now. Okay, but as we know, there's lags. Okay, they use a smoothing average, a smoothing process, right? Because if your endowment, let's say well, how about this? Like Harvard has a $36 billion endowment. Last year they made, let's say, 14%. 2 years ago they might have made 2%. 3 years ago they may have made 8%. Right? Go back 7 years, they might have lost 20%. So how do you create an annual budget, a spending policy, if one day, oh really? Oh, hopefully I didn't miss that. Oh, 10. Yeah, shoot, thanks. So amateur, right? So if you're planning a budget for Harvard University, you know you have like this many expenses. And you also know there's inflation, right? But what you don't know is how much money your endowment's going to provide this month or, this year versus last year versus the next year and all that kind of stuff. So how do you make a budget that's consistent? Because you can't like hire a bunch of people and then a year later the endowment has a bad year, so then you have to lay everyone off. And then the next following year is good again, so then you hire other people, and start projects and stop projects. You can't do that in a budgetary policy. The board of trustees would just like collapse, right? Their brains would explode. So what they do is they average it out and they start basing it on an average. And I say, well, that's fine and dandy. So their blue line is an average of returns. But I'm like, but there's a better way. And so I designed 2 different ways, to make it more accurate in their budget policy. So like the orange line here, when times are good, I'll actually allow them to spend a little more, but then I can quickly find out when things change based on real world results, and I can quickly tighten up the spending instead of just saying, well, we look at the long term. We don't like to look at reality. And, it'll probably come back. My money manager says, just ride it out. This is why we have diversification. F you. Performance is down. Slow your spending down, bruh. Pay attention. That's what I say. Anyways. Yeah, like Ron, right? Ron, it sucks that I don't understand many people. So anyways, gotta go, guys. That's just, what's going through my mind. And then as soon as I get all that out of the way, I got to then do my financial accounting for Harvard Business School. I got my final. They're the first final, and it's coming up very, very soon. It's proctored. That's always uncomfortable, right? So anyways. Is it proprietary? I don't know. Yeah, well, I think technically Harvard owns it, right? Where do you think they get all their brilliant ideas? Their students and their professors, and they own all that. So I'll see you tomorrow, guys. Maybe. Oh, in the real estate as well, but I was thinking of quitting and focus on Forex. Yeah, well, it depends on how much money you have, right, Bernard? So if you have a portfolio of income, yeah, so I'm doing real estate stuff. Do I have any real estate in front of me? No. Yeah, you just live off the income and the appreciation, right? So next year, no, 2020. So in 18 months, we're going to have a small recession in the United States. And then 2024, we're going to have a large recession in the United States. I would say after the rally, so let's say the 2021 to 2024 rally is when you should start dumping your portfolio, your real estate portfolio. Right? And that would probably, but so you can start doing Forex. I wouldn't add then. I wouldn't add to the portfolio. I would dump at the portfolio. Most people that lose money in real estate will lose it because they're ramping up between the 2021 and 2024 rally. So they'll be paying too much and too late, and lots of production will be in the process. And in 2024, anything being built in that time period is going to come to market, and then there'll be oversupply, and of course, then there's going to be a crash. Great. Plus, financing will be expensive because interest rates will be high and all this kind of stuff. So if you've built your portfolio now, yeah, probably be all right to then now focus on Forex. Let your portfolio continue to provide income, and I'm sure you locked in low financing, so so that all of that's low, right? So as long as you got a decent NOI, you should be fine, right? Ride that all the way through, let it appreciate, all that kind of stuff. Meanwhile, you're doing Forex, so you're not adding to your portfolio. And then in that cycle, like 2023, you should start dumping it, going to cash, and then 2025, 2026, you rebuild your portfolio. Hey, Jimmy, go to fxbootcamp.com, and there's a beginner's course that will just blow you away. And once you've done the beginner's course, then do the swing trading course. It will blow you away. Blow you away. But go there, Jimmy, and stop being a beginner. fxbootcamp.com. All right, guys. Oh, and yeah, thanks, Bernard, for opening an account at Trader's Way. We appreciate you.